From our Stars and Dogs segment, it's time for this week's Star.
The star of the week is Modine Manufacturing Co., symbol MOD on the New York Stock Exchange, which is up 54% over just the last month and 97% year to date. The company designs, manufactures, and tests heat transfer products for a wide variety of application markets. The company has two segments, Climate Solution and Performance Technology. The stock price has had a strong run over the past year and has recently been pushed up higher after posting strong fiscal quarterly results. Net sales increased 21% from the prior year to $578.8 million, and earnings per share skyrocketed to 46 cents from only 1 cent in the prior year. The company is attributing the strong results to strong gross margin improvements of 280 basis points or 2.8% to 16.6% total, as well as increasing volumes across both segments. The company has seen choppy revenue and net income over the past 5 years. The revenue hasn't significantly increased past the recent 5-year trend, but income from operations has pushed higher and higher, leading to this bullish case. The recent spike in earnings has additionally allowed the company to pay down its debt by $32.1 million, lowering its net debt position to $301 million. The company is betting on the ever-growing data center industry, which of course needs significant cooling. The company has recently repurposed a facility which was formerly a warehouse in Rockbridge, Virginia, which is around a bunch of these data centers, to manufacture these cooling solutions under its Airedale brand. We'll see what in the coming years and months whether or not Modine can finally have sustained growth, but for now it is our star of the week.
Do you have a valuation on that, Brett?
Not on the top. I'll quickly check. It's not too high for their recent growth. It's a 9 PE, but like I said, it's been very choppy over the last few years.
Interesting. It's an interesting space, data centers.
Exactly.
Certainly, I mean, if they're servicing the cloud market, that's a market that's where it's continued to grow at a very strong rate. Public cloud spending, I think, is estimated to increase 21% in 2023. So high growth market. There could be opportunities.
Yeah, and there's companies servicing these sectors. I mean, the revenue growth, like over the past 4 or 5 years, has not been tremendous in this business. The profitability, the margins uptick significantly there. So what we would have to do when we see this is that sustainable? Was there, did they increase prices and commodity input prices came down, or there, something like that? And can that reverse in a quarter coming up? Because we are seeing, and are they seeing onshoring, like reshoring of the operations, what was previously being bought in China? I'm not saying that's going on with this business at all, but there are some businesses that we look at that have had in the manufacturing sector tremendous growth over this year, where growth they haven't seen either ever or certainly in the last 3 to 5 years. So we just we want to make sure whether or not there are some companies that were taking on higher inventory. So were they buying, like their end customers buying more to have more in inventory because of the shortages they faced? I mean, it was a trend always, because it's more efficient to have like just in time type inventory, right? Like you don't hold a lot of inventory because it costs money. Now that kicked people in the groin during the pandemic, because like if you didn't have the inventory, you couldn't sell products, and that had happened. So they built up inventories. I mean, we looked at Expel as a business they follow. They just had results out yesterday. I mean, they have built up inventory over the course of this year because they don't want to be caught with their pants down without having the product to sell if the demand is there. Now they are going to take that, as the economy normalizes, they're going to take that inventory down to more normalized levels. So whoever, they've bought it, the input they've bought, they're going to at some point buy less in a quarter. So we got to make sure that some of these manufacturing companies aren't selling something that other companies have been stocking their inventories with in this unique condition, because it is a really unique environment. But there's certainly, if everything is being reshored, that's a positive for North American manufacturers. So all of these factors have to be taken in, and it is a very interesting time. And there are some opportunities out there. I mean, we had one of the companies in our coverage that manufactures our star last week, Hammond Power. The stock has gone from $11 to $21 this year in a terrible market, because I know some of these trends have worked in its favor.